Get ready for the action because Wall Street is taking a hit today. The Dow dropped nearly 0.2%, the S&P 500 shed over a third, and the Nasdaq dipped marginally. We start with ARM Holdings, where U.S.-listed shares tumbled 10% as worries about securing supplies for its new AI chip overshadowed a strong earnings forecast. We dive into the details of this massive downturn and what it means for the tech sector.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at the cloud computing scene with CoreWeave. This company closed down more than 6%, but we'll explore how it managed to gain ground in extended trading after reporting strong demand for its high-performance computing services used to train and deploy those cutting-edge AI models. Find out what drove this mixed performance in the cloud infrastructure space. Now it's time for some big gains across the board. We're looking at the incredible surge for Datadog, which soared 31% after the cloud monitoring company raised its full-year earnings forecast. We will also cover the jump in cybersecurity stocks, with CrowdStrike soaring 8% and Palo Alto Networks adding 7%. Plus, we examine the mixed signals from Whirlpool, which slumped nearly 12% after missing sales estimates. Finally, we wrap up with the big picture. U.S. stocks are setting up for a higher open thanks to strong jobs data and a chip recovery. We'll examine how the strong employment report, showing 115,000 jobs added in April, boosted investor confidence, while chip makers like Microchip Technology and Qualcomm saw major rebounds. Don't miss this crucial update. Tune in now for all the market analysis. Wall Street experienced a downturn on Thursday as major indices retreated across the board. The Dow Jones Industrial Average fell by nearly 0.2%, the S&P 500 shed over 1/3, and the Nasdaq saw only a marginal dip. Market sentiment was significantly impacted by ongoing uncertainty surrounding peace negotiations between the United States and Iran. Reports indicated that Iran was reviewing a proposal aimed at halting hostilities, though key contentious issues remained unresolved, injecting caution into investor sentiment. Sector-specific weakness was evident in the technology space, particularly among leading chip stocks that gave up recent gains. ARM Holdings shares tumbled by 10% amid concerns regarding its capacity to secure necessary supplies for its forthcoming AI chips, despite a strong earnings forecast. Intel and Advanced Micro Devices also declined, erasing some gains made earlier in the week. Keith Buchanan, senior portfolio manager at Globalt Investments, expressed concern over the concentration of market gains. He stated that leadership has become too narrow, questioning whether the current participation level is sufficient to sustain the bull market. He emphasized that the upcoming earnings season is crucial for providing clarity and spreading momentum beyond the current concentration of gains. In contrast to the chip sector, other areas showed notable movement. Cloud provider CoreWeave experienced a significant drop, closing down more than 6%, though it managed to gain in extended trading after surpassing analysts' estimates for quarterly revenue, signaling strong demand for its high-performance computing services essential for AI model training. Positive news also fueled gains in other segments. Datadog shares surged 31% following a raised full-year earnings forecast. Cybersecurity stocks saw similar upticks, with CrowdStrike jumping 8% and Palo Alto Networks adding 7% to its valuation. Elsewhere, the consumer sector faced headwinds, with Whirlpool shares slumping nearly 12% after the home appliance maker missed first-quarter sales estimates and announced a dividend suspension. Investors are now keenly focused on Friday's non-farm payrolls report, which is anticipated to confirm continued resilience in the labor market. Global markets experienced a surge to new highs before pulling back on Thursday, as investor sentiment cooled in the chip sector and oil prices rebounded above $100 a barrel following uncertainty surrounding a potential U.S.-Iran deal. The market pause has left traders focused on the upcoming catalyst. The U.S. jobs report scheduled for Friday. In Orlando, Florida, the U.S. and global stock exchanges achieved fresh peaks, but trading concluded lower after chip stocks lost momentum and Brent crude recovered from earlier dips, supported by speculation regarding a deal between the United States and Iran that pushed oil prices above the $100 mark. Analyzing the U.S. labor market ahead of the April employment report, the outlook presents a complex picture. Former Fed Chair Jerome Powell described the current situation as an unusual and awkward balance in the labor data. Looking ahead, market expectations remain heavily influenced by monetary policy and geopolitical factors. The Central Bank of Norway has raised interest rates sooner than anticipated, marking the second hike among leading regulators this year, with further moves anticipated from the ECB and BOJ next month, and potential hikes from the BOE and RBNZ in July. The potential U.S.-Iran agreement remains a significant variable influencing the hawkish tone. Currency markets are also showing shifts, with the yuan strengthening against the dollar and approaching the 6.8 per dollar mark, the strongest level in over 3 years. This development could temper concerns ahead of a planned U.S. presidential visit to China, despite ongoing trade policy criticisms. Regarding employment, while initial jobless claims are declining and JOLTS data indicates rapid hiring, the overall picture is nuanced. The unemployment rate remains low, yet analysts caution that worker demand might lag behind the pace of economic growth, with technology and AI introducing specific risks to certain segments of the labor market. The key drivers for tomorrow's market direction are expected to center on employment dynamics and monetary policy decisions. Fundamental factors, inflation, labor market health, and geopolitical events remain under intense scrutiny. U.S. stocks reached near-record highs today, driven by strong monthly payroll figures and gains in semiconductor sectors, amidst a seemingly stable U.S.-Iran ceasefire. The S&P 500 index climbed 0.5% at 9:38 a.m. in New York, with 7 of 11 sectors showing positive movement, led by technology stocks. The Nasdaq 100 index saw a 1% increase. Heavyweight chipmakers including NVIDIA Corp., Micron Technology Inc., and Qualcomm Inc. surged, with Microchip Technology Inc. gaining 0.52% following better-than-expected earnings. The Philadelphia Semiconductor Index, or SOX, rose significantly by 3.4%. Economic indicators supported the market sentiment, as U.S. employers added to payrolls in April, marking the first consecutive month of job growth in nearly a year. This solid jobs report is fueling increased risk appetite among investors, according to RSM chief economist Joseph Brusuelas. Equities rebounded following Thursday's dip, supported by the perceived stability of the Iran ceasefire despite overnight clashes near the Strait of Hormuz, and a positive development concerning a federal trade court ruling that deemed President Donald Trump's 10% global tariffs unlawful. Many investors appear to be setting aside the conflict for the time being, focusing instead on strong corporate earnings. In earnings reports, several companies showed significant movement. Payments company Block Inc. climbed 5.7% on a positive outlook following adjustments related to AI-driven job cuts. Akamai Technologies Inc. experienced a substantial 18% rise after raising the outlook for its cloud infrastructure services business following a major deal with a leading frontier AI model provider. Conversely, AI data center operator CoreWeave Inc. fell 9.5% due to a disappointing forecast that raised concerns about slowing growth. Investor confidence has also been bolstered by analyst actions. RBC raised its rolling 12-month forward price target for the S&P 500 to 7,900, citing more upside potential as stocks overcome current market anxieties. On the consumer front, however, signs of softening were noted. Bank of America U.S. economist Aditya Bave reported that card spending growth per household slowed sharply across most categories, excluding gas, and across various income groups, suggesting underlying consumer caution. U.S. stock futures are poised for a higher open following a robust employment report and a recovery in the chip sector. The Labor Department's employment figures showed the U.S. economy added 115,000 jobs in April, significantly exceeding economists' estimates of 62,000. The unemployment rate remained steady at 4.3%, bolstering confidence in the labor market and reinforcing expectations that the Federal Reserve will maintain current interest rates for the time being. Analysts suggest this solid labor market provides consumers with confidence for continued spending. In the early trading, Dow E-minis gained 183 points, S&P 500 E-minis rose 40.5 points, and NASDAQ 100 E-minis climbed 249.5 points. Chip stocks experienced a strong rebound, with microchip technology rising nearly 2% on better-than-expected first-quarter revenue forecasts, while Qualcomm jumped 6.2% and NVIDIA gained 1%. These gains helped offset geopolitical concerns stemming from clashes in the Gulf, which dampened hopes for a quick resolution to the Middle East conflict and the reopening of the Strait of Hormuz, pushing oil prices above $100 a barrel. Despite inflationary pressures from oil, the S&P 500 and NASDAQ have reached record highs, supported by a strong earnings season. Data from LSEG indicates that 83% of S&P 500 companies reporting first-quarter results have surpassed analyst earnings estimates, surpassing the long-term average of 67%. However, some earnings disappointments were noted, including significant drops for Cloudflare, Trade Desk, CoreWeave, and Expedia, reflecting sector-specific headwinds.